We actually start to see large banks getting in the business.
Is this good or bad? The like financialization of Bitcoin, let's talk about. And then there's obviously all of these other technologies and assets. But I think that there's a group that would argue the more that the asset becomes financialized, the more that it gets not just accepted by the licensed organizations, but you see legislation or directives that say you have to be FDIC insured in order to interface with this stuff. They look at that as negative. There's other people who look at it as a positive. So how do you think about the pros and cons of what I'll just call like the financialization of what were assets that many people were attracted to in the beginning because they weren't part of the existing system?
Bitcoin is decentralized and it's an asset and it's already gone to 200 million places. And you might not like the people that own it, right? Don't they call it the money of enemies?
Yeah.
Right? The point is Bitcoin's going to people who have politics that you disagree with, right? It's almost certain. So it's spreading at such a rate. It's like fire. And it's like electricity or mathematics. And you can have an opinion. Do you think it's good or bad for banks to have mathematics? It's like, we're the only ones with math. Is it good or bad for people to be able to read and write? It used to, there was a concern that we shouldn't let everybody read and write. It's just basic technology. It's spreading as fast as it can spread. The reason it's superior to gold is because I can snap my fingers and I can withdraw $1 billion of Bitcoin from the bank in 5 minutes.
Correct.
Okay. And the thing that's going to maintain its integrity is the fact that you can shift counterparties. You can move, if you can move $10 billion of an asset out of a jurisdiction, I can move it out of Miami. I can move it out of a bank. I can move it out of a country. I can move it out of a system. It's always going to have more integrity than the alternative. So coming back to this, it's like, okay, are you comfortable? There are a lot of people that don't think you should have a software wallet on an iPhone. You should have a hardware wallet, right? There are a lot of people that think that it's better if what if I don't want your family to have it because I don't like somebody in your family, right? What if I don't want your small company? You have a private company. Do you own some Bitcoin? Well, did you sell out? Now there's a company that's got other corporate interests that has some Bitcoin. A lot of people don't want a public company to have it. Why? Well, public companies have shareholders. Yeah, well, I don't want a country to have it, right? I mean, there are a lot of people that are concerned that El Salvador uses Bitcoin. Well, it might get hijacked by the politicians. What if Turkey actually starts buying Bitcoin? Do I like it? Do I not like it? But the point is, it doesn't matter what you think, right? It's not, it's like you sitting and saying,
welcome everybody to the B Word. I'm Steve Lee, the lead of Square Crypto, and I'm here today to moderate a discussion about Bitcoin that will span from what makes it special to the its relationship with energy, the community ethos, and the future of Bitcoin. I'm joined by 3 special guests. First is Cathie Wood, founder, CEO, and CIO of ARK Invest. Next is Elon Musk, techno king of Tesla and chief engineer of SpaceX. And finally, Jack Dorsey, CEO of Square and CEO of Twitter. So we have a lot to talk about today.
He announced that he was going to put a very material portion of his company's balance sheet into Bitcoin. And so maybe, Michael, we can start with kind of a 1-year update from when you actually decided to make that decision and how things have been going so far with MicroStrategy.
Sure. Well, if you roll the clock back to July, we had $500 million of capital in our Treasury. We were holding short-dated Treasury securities and generating effectively like 20 basis points of yield on it. We'd seen a K-shaped recovery. Wall Street came back with a vengeance. Main Street was flat on its back, and it was clear there's monetary inflation. So we decided that we were going to lose a large portion of the $500 million in purchasing power if we didn't do something. My forecast then was probably like 25% inflation, and you could have got there just by looking at the S&P index. So I thought, 500 million minus 25%, like losing $125 million in 12 months is kind of like losing money at 2 to 3x the rate that the 2,000 people in the company were making money. So we either needed to give the money back to the shareholders or we needed to invest it in something. So, the thought was, well, if we're a Main Street company struggling against all the lockdowns with all the uncertainty, and we are doing it minus $500 million, it feels like a university giving up its endowment as it goes into a crisis, right? So decapitalizing the company, it was a way to give the $500 million to shareholders. They would have put it in the S&P 500 and they would have got 34% on it if we had done that. But we would have, in essence, left ourselves defenseless without any capital. So that was one strategy. The second was invest it all. I would have bought 500 million worth of Bitcoin if I was a private company. I just would have walked out, bought all 500 million. I would have done it at whatever, $10,000 a coin. But as a public company, you got to think about your outside shareholders. And you can't, it's not like there's 10. You can't just go to the 10 of them, ask them what they want to do and get their buy-in. When you're public, you've got a shifting set of outside shareholders that are changing every minute of the day when the stock market is open. So the way that you actually handle this is a bit more sophisticated. What we did is we transparently, we telegraphed that we were looking at this. Our first press release was an announcement that we were going to buy back $250 million worth of our stock over the course of 12 months. And we were going to invest $250 million of our capital in hard assets. And we said, we're looking at everything under the sun, and Bitcoin was one of the things. So my first love of the Bitcoin community was, the way that I knew I liked all the Bitcoiners was one day later, some cyber hornet, some Bitcoiner goes, MicroStrategy is considering buying Bitcoin with $250 million. Now, as Bitcoin merged in there with gold, silver, commodities, equity, property, real estate, anything you could have imagined. But the Bitcoin community immediately picked up on that. I don't know how they do that, right? They must be scanning for this. Nobody else picked up on it. The stock was trading $120 a share. A week goes by. Literally, you announce you're going to spend $250 million and buy your stock back. You think it would move? Nope. Crickets. But the market had a week of notice. And then a week later, we stepped it up into the next gear, which is, okay, we're going to buy $250 million worth of Bitcoin. We made the decision. We're not splitting it across 6 assets, right? And it's a good thing we did, right? Because Bitcoin's up 332% in 12 months. Gold is down 7%. If we'd split it 50-50, 125 million of gold, 125 million of Bitcoin, right? It would have cost us billions. If we'd gone all gold, it would have cost us many, many, many billions. We'll come back to that in a second. So we had to do something, but the question is what? So we just picked Bitcoin. We made the decision, but we thought, this is going to be jarring for some people. Stock is around 122 at the time, right? To put this in perspective, the company's $500 million revenue generator, generating cash flow, and we have more than 500 million in cash and about 10 million shares. So the company's trading at 1 times revenue plus cash. We give back all the cash, the company trades at 1 times revenue, the stock goes to $60 a share. Right? So we're like 122, no one's really paying attention, but we said, well, maybe people think this is offensive, they're not going to like this, or it's too risky. How do you actually orange pill every one of your outside shareholders at the same time? Well, you can't. So the next best thing is we just offered to buy them out. So the idea is if you don't like this, we're going to buy you out. We're going to post $250 million to buy back shares at a premium. So we offered to do the buyback at up to $140 a share, which is, buyout premium. If you don't like it, then you sell your shares back to us at a profit. We wait 20 days. So the market trades for 20 days, and in the first week, the market's trading on 135. Like people, so they're not even quite sure about the buyout. Then after a while, they start thinking, they're like, well, if I can put it back to the company at 140, then presumably maybe it's worth more. So the stock trades up a bit past the 140. And at the end of the tender period, we have about $60 million worth of shares tendered. Everyone that didn't like the strategy had 20 days to sell into the open market. And if you sold in the open market above 140, then why wouldn't you? And if you're still holding the shares at the end of the tender period and you don't like the strategy, you sell into the tender. So the result of the Dutch auction is we had $175 million of extra capital. We thought about it. We put out another press release. Okay, this is our primary Treasury reserve asset. So the first notch was, this is a Treasury reserve asset. The second step is, this is the primary Treasury reserve asset. Then we bought 175 million more Bitcoin. So at that point, we're up to 425 million. The first tranche is in the 11,500 range. That was a little bit difficult. It was more difficult to do the second tranche because Bitcoin traded down. We had a loss. It traded down to into the tens and even, you remember that. So the second tranche we bought at 10,000 something because we're committed, right? And if you go pull the Twitter stream, there's all sorts of interesting commentary on our strategy.
So you basically had done, let's call it up to that point, 425 million of a $500 million balance sheet. And you had rotated your shareholder base to people who were aligned with the strategy. And you had also planted the flag in the ground as the first publicly traded business in the United States to identify a treasury strategy that would leverage Bitcoin as the primary currency or the primary asset that you would use in your treasury. When you do all that, I know that there's been a whole bunch of conversations in the behind the curtain. I don't need names, but what are other fellow publicly traded companies, other finance executives, people on Wall Street at that point? Are they saying you're crazy? Are they, oh, wait, this is really interesting. Tell me more about it, trying to learn? Like, what was the reaction after the first $425 million?
I think it was largely ignored by every other publicly traded company. I don't think there's a lot of awareness or to it. When we did our due diligence checks, we found Overstock 2 or 3 years ago had a few $1 million of Bitcoin on his balance sheet. And that's it, right? We couldn't find anybody else. And so this is off the beaten path, but it seemed like so rational to me. Like it seems so obvious. Bitcoin is digital gold. It's basically engineered to be digital gold. What do you need in a inflationary environment? You need something that's like gold, but better than gold. You have to make a choice. It was obvious that the institutions were coming, right? I mean, you had companies like Fidelity getting into this space just 6 months earlier or whatever. But the fact that we're institutional custodians was a big checkbox. Grayscale was doing good business at that time, so it struck me as being a rational thing to do. But no other public companies had done it, and it wasn't totally clear to me why. Although at this point now it becomes clear, right, in hindsight. So we went through that. We did the 425 million. The stock traded up. Bitcoin started trading up. At that point, I started speaking in public, and you were the first person I spoke to.
I remember,
right? and I learned most of what I knew about Bitcoin by scouring the internet and looking at your podcast and reading all of the stuff that was posted, right? And I tripped through all these different things. And one thing I knew from your podcast was you always asked a question right? You know, at the end, right? You're like, you can ask me a question. Remember?
Correct.
Now you get to ask me the one question. So what I remembered about Pomp was he wants to know a book and he wants a question, or he gives me a question. So I'm like, gosh, what question am I going to ask Pomp? And you know, how do you learn Bitcoin? You study Twitter and you study YouTube and you surf the web. So here's what I know. I know I get to ask you a question, and I know Jack Dorsey has Bitcoin in his bio. So the question is, how do we get Jack Dorsey to buy Bitcoin next?
Correct.
Right?
Correct.
And you know, at that point, we're all alone as a publicly traded company, and people aren't quite sure if we're crazy. But what happens next is some bullish things, right? I mean, I thought that when Square bought Bitcoin, that was a seminal event, right? Because one data point is a question mark, but when you had the second data point, you can draw a line. And so that was a big day. When PayPal announced support for Bitcoin and they started moving it, that was a big day. That was a data point, right? Those were the data points that moved us from 10,000 to 12,000 a coin. And at some point, you know, some Citron research studied, you know, discovered my stock, and Andrew left, I guess, said something positive, and the stock started trading up, and then it traded into the high 100s, and then it traded into the 200s, and Bitcoin started trading up, and when we got into the teens, people thought, oh, well, there's something interesting here. So the next step in our journey was, like, in addition to me starting to communicate why we had done what we'd done, the next step in the journey was to go out and buy more Bitcoin. So we started buying more Bitcoin as part of the Treasury Reserve strategy, and that got people's attention. Then when the stock got to the 300 range, that was the highest it's been in a decade, 300. So we started thinking, well, maybe we can raise more money. And so we went back to the convert market, and we were trying to raise $400 million in a convertible debt offering, but it was extremely popular and we were oversubscribed. So we upsized the deal to $650 million. So that was a screaming home run. We had proposed a 32 to 37% premium. We priced it at the 37.5% premium, the high end of the spread. We'd proposed like 1.25% to 0.75% interest. We priced at the low end of the interest rate. So we raised $650 million at 75 basis points with a strike price of $398. The stock had not traded at $398 in a decade. So it seemed like reasonable. If you could sell $650 million of stock at $398 a share, seemed like a reasonable thing to do at the time. So then we took that and we bought Bitcoin.